All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. We're looking at a market here this morning that's, relatively flat. We've seen a little up and down here, since the open. I'm just zooming in here on it, and you can kind of see this, market opens up, a couple point dip, couple point rally, 26.49 down to 26.39. So a 10-point drop here in about 10 minutes, and the market's kind of recovered most of that here in the last in just the last a little bit, but market up 3 points, 4 points here, and small caps flat. The Nasdaq slightly in the red here this morning, as some of its key components are a little bit weaker than than the rest of the market. You take a look at Facebook this morning, trading on down about $2. I mean, Facebook's trading further down than what it was yesterday when the market was down 30 points. We have Twitter down about $1 here this morning. And you can see how these just kind of opened up and fell right off. These are both stocks that opened higher here this morning and really kind of just fell off here. We do have Apple earnings after the bell, and Apple kind of went the opposite direction here this morning. Opened up and went higher. So I show that just to show that there's still a lot of differentiation out there. This is not a market where everything's moving together. We have AMD, which is moving slightly lower here ahead of their earnings. And just something where there's a lot of mixed bag. Mixed bag within groups, within sectors. I mean, even this morning, you take a look at Bank of America, it's down 8 cents, and JP Morgan's up $1. Right, and it is that type of market out there today, and not a huge surprise, but not exactly enough catalyst to say, hey, you know what, things are going somewhere right here. And I made the quick comment this morning that the way the pre-market sets up, it suggests that the market's going to be what it's been here over the last little bit, and that is just really go nowhere. Just really go nowhere, and that's what the S&P has been. The S&P really has just gone nowhere. Here in the last, pretty much since, pretty much in the last week and a half, just has gone nowhere. We have the gap down still in play from yesterday. The abandoned pattern still in play. But as we talked about yesterday, these aren't immediate patterns. It's not a pattern where, immediately you look at and go, oh, okay, well, I'm just going to expect that the market just free falls because of this pattern. That's not the typical. The typical is for a little bit of mucking around this area, and then, pushing on lower. What would erase that? Well, if you look historically or you look past charts, one of the common things that erases this is when there's a gap up that basically gets sold off in the morning and bought back up later in the day. Then that kind of erases this abandoned pattern, and we could still see that. Today's gap is not worthy of even calling it a gap here overall. So that would be something that comes into play here a little bit later. But really, not a lot of drivers out there this morning for the market. We saw S&P futures fall off last night after the bell. And you can kind of see them drifting lower here. They were down about 12 points a couple hours after the market closed yesterday, and just on concerns of Chinese U.S. trade relations with the corporate espionage. That same story that's been with the market for months now, and it's played out. And it's just one of those stories that. There's stuff that continues to ongo with it, but the market knows how to to digest that already and has digested it already, and so very little meaning. And we saw it erased relatively quickly. And then Europe opened up, and we saw a little bit of sell early, and then just mild, gradual, uptick overall. Now, one of the things we are seeing this morning is just a little bit of, chopping around. It's not to a degree where the volatility is excessive or much greater, but it does have the NASDAQ weaker. And, days where we've seen the NASDAQ weaker, we have seen, a little bit more of a propensity to sell, over the course of the day. And if you're looking at that, we actually have a nice little reaction high, reaction low built into this market today. And this is something that the market just hasn't given very often here of late. And, reaction high right up here at 26.50, reaction low right here at 26.29 or 26.39. And basically what's that say? Well, this is a reaction range that's set in the first hour, right? And generally what happens is anything in between it's pretty meaningless in terms of, direction. But a lot of times if one of these reactions get broken, we're going to see the market, the next move be in that direction. So if the high gets broken, we'll see a substantial, push higher, 10, 12, 14 points. If the lows get broken, we'll see, 10, 12, 14 point, drop there with it. If they're broken on some sort of catalyst, then we'll be talking about, a much bigger move, but would need a catalyst to, catalyze it, right? And so overall, that's what we're looking at here in the market. It's still one of those where if as long as Wednesday's Wednesday's lows hold, it's generally a bullish condition, but a very neutral in reading. We saw the market vibe last week. Trigger neutral, and the market's just gone nowhere since the metrics triggered neutral, and there's no real decay in them here this morning, no real warning sign in them here early on. Now we have a few earnings, and I haven't had a chance to go through them all here, but let's go take a look at Triple M. This is a big industrial. And you can see that it's up about 3% here this morning. And, back up here to around $200. And this is a company whose stock just really hasn't gone anywhere of late. Here's the weekly chart. And you can see it fell off at the beginning of 2018. And this was one of those that just never, even though the market went back to new highs, Triple M didn't. It didn't go back to new highs, didn't even go close to new highs, was still 20% off of those highs. So, technicians would argue it's still in a bear market or something of that nature. But, they had some gains to consolidate. This is a stock that went from 130 to 250. A big Dow industrial, big conglomerate, essentially doubling. That's a massive move here for a company that has $100 billion market cap. I mean, it's definitely in that large cap area, definitely in that large cap space here. It's one of those companies, just sub 3% dividend on them, so a decent dividend, but nothing to get too excited about, but overall, it's a company whose stock price can and does move, and it's one whose earnings, when we go and we look at some of the headlines, they're kind of a mixed bag. In fact, let me pull up Triple M here, and you can see the where the earnings are. And you can see the earnings beat expectations, right? Now, they dipped in this quarter, as they typically do. It's very cyclical, the earnings of this company. There's almost always a fourth quarter dip here associated with it. So, that expectation was there. You can see how they missed last quarter, right? They missed pretty good last quarter. And, that is still, a little bit of an overhang with the company. And you can see the revenue. Big miss last quarter and pretty much in line here this quarter. And so, nothing really overly special with, a beat here with them. Nothing you look at the number and go, wow, okay, that's fantastic, or that's really different. But think about expectations going into this earnings season, right? This is a very different expectation type of environment out there, and it is one where if you're able to beat the expectation even a little bit, you're getting rewarded to a much greater degree. Now, where do we expect Caterpillar from here? Right, and they came out with their future guidance and everything and whatnot, and fine. To me, it's just like everything else. If there's trade war resolution, Triple M's going to do really well. If there's not, they're going to struggle, and that's just bottom line. That's just bottom line here. When it comes to Triple M, and I look at it very similarly. But is there a value here? Meaning, are we talking about a company that has some a really nice valuation where we can say, man, this thing's really cheap, or hey, man, this thing's pretty expensive. Well, price to sales, kind of like Caterpillar, doesn't really matter. Right? It just follows the stock. Price to book value here, kind of similar. Just has followed the stock over the years, so no real takeaway from those. And even PE ratio, it just follows the stock. So no real key value takeaway from any of these three value metrics, right? So it's not something we can really say is cheap based on any of those three. You look at the revenues here for Triple M, they're at all-time highs, right? They're at historical highs, as they're up here around $33 billion. But one of the things that's fallen off for Triple M over the last while are their margins, right? Their margins have, fallen about 3% here with them. And so, just not a company I can look at and say, wow, this thing is really cheap. It's also not one I look at and go, wow, this is really expensive, sell it, sell it, sell it. To me, this is just one of those that just kind of like Caterpillar. You know what? If there's resolution, the markets go higher, it's going to go higher. Do I expect a big outperformance? Yeah. If there's some sort of resolution with China, and China turns on the spigots, meaning the financial easing or quantitative easing spigots, like some of the reports suggest might happen, Triple M is going to be a big outperformer. Is it going to outperform CAT? Probably not. But will it be a big outperformer? Yeah, it absolutely will be if that scenario happens. No, if none of that happens and we fall off, it's going to go lower. It's definitely going to go lower. So, I just look at it and I go, okay, not a whole lot here that I find to be highly differential, not a whole lot that I find to be, that they're in this kind of unique spot or anything like that. It's just kind of, all right, just one of these industrials in a spot that it's in. It's probably pretty fairly to slightly overvalued right here, in terms of just the pure metrics. But, this is a company who historically has higher metrics, right? And rightfully so. They're a very well-run company. They do a lot of things well, and they have a lot of, broad-based exposure in a lot of different areas. So it's on my trade radar. It's something I'm willing to buy calls on. I'm willing to buy puts on, just based on the chart, and, something that, we can make an argument that it's going to go to 160. We can make an argument that it's going to go to 240. And neither of those arguments have anything to do with the company itself. It has everything to do with extraneous factors in terms of U.S., China, quantitative easing, economic growth, all of those factors. Those are the arguments for Triple M. Not oh, well, Triple M's margin and Triple M's this and Triple M's that. Yeah, you know what? All those are. And, we can point to some bullish factors in there, some bearish factors in there. But those aren't going to be what drive the stock. The stock's going to be driven by the macro here, and that's very clear after seeing the earnings here with it. Now, one report I haven't had a chance to go through that I will go through here today is Harley-Davidson Hog, and this is a company and a stock that's down about 5% here this morning, but it's been bought up from the moment of the gap. This has been a company that has caught comments from U.S. President Trump, for sending some of their production overseas. It's a company that in many ways is highly dependent on growth in India. And, one that, just has really struggled to gain much traction here over the last several years, and is one that I'm very interested in seeing what some of the, conference call, sounds like. And, this isn't one that I will typically trade. In fact, I don't trade it very often. But if you start to take a look at where Harley sits, its price to sales is down here around 1. This is about the lowest price to sales that it's had in many years. Naturally, it does follow the stock a little bit, but coming down to 1, price to book just follows the stock, so nothing, too great there. But a PE ratio of 10, historically one of its cheapest PE ratios overall. And, you see this revenue uptick over the last year here for Harley. And I haven't seen the guidance numbers and all of that here just yet. But if we're talking about, something where Harley's revenues are going to uptick a little bit, we're talking about a stock that can be deemed, pretty inexpensive and pretty cheap. I also want to see what's going on with the margins. If they're able to uptick those even just a little bit, would be a big positive here for them. But this is one where, fundamentally it's coming into a space that I find to be very interesting. More interesting than something like Triple M. And, technically I'd like to see it have a higher low, start to come into play and whatnot there. But, when you look at Harley, it's been a story of bad news. It's been a story of, a lot of bearish reasons. It's 10% short. It's 10% short. And are the shorts getting everything that they want here today with this earnings report? I suspect they might. And in fact, if you look at the volumes, this might be one of the highest volume days for Harley in many years. And it's already one of the highest volume days over the course of the last year. Obviously on earnings, volumes are always a little bit higher, but it's an hour into the trade and it's more than half of what the volumes were on any of its other earnings days in the last year. So, it tells me something else is going on here. And so we'll be taking a closer look, here today, and I'll talk about it going forward. It's also a stock that being down at this level, it's got a 4% dividend. It's got a 4% dividend. That's pretty interesting. Harley's not one that you talk about as a dividend name, but getting down there overall. We saw Verizon earnings here. And, we see Verizon down about 2% here. Look, bottom line, Verizon's just an expensive company. It is just a very expensive company. And there's no ifs, ands, or buts about it. When you look at it fundamentally, it is very expensive. And you can argue rightfully so. And it doesn't have to get cheap, but it is not cheap enough to withstand any kind of bad news. It's not cheap enough to withstand any sort of negatives there with it. I'll go through the earnings here today, but, just looking at the headlines, nothing really stood out. I'm much more interested in AT&T after the bell here today. This is one where, we look at how expensive Verizon is versus how cheap AT&T is. You look at the historical correlation there. It strongly suggests that AT&T is going to be a big outperformer over Verizon over the course of the next year and a half. And, while I'm very interested in the earnings, I do want to set up one of those combo trades where I'm long AT&T, short Verizon. That way I don't really, I'm not dependent on the market. Just the fact that AT&T will outperform Verizon. And, we'll see if it's worth setting something up like that here after I go through some of the, earnings here. With it. I do suspect that these earnings will have changed a few of the valuation metrics for Verizon, made them just a little bit cheaper than what they have been. But going forward, is it enough to really kind of hold things up or justify some of their valuations when they have about 1% growth? When you don't have a lot of growth, your valuation metric needs to be a lot cheaper, and so we'll see. We'll see where that is. A lot of these companies and whatnot are still going through their conference calls and everything, so it's not like I don't want to sit through all the conference calls. I want the summaries. I want the written versions, and to be able to go through those a lot quicker than sitting and listening to all the Q&A and all the silence here overall that can be in some of these reports. For the challenge, I have XLF. XLF hasn't gone anywhere here today. Up a penny. And look, the same principles are there from yesterday that we talked about. Same as on the market. There are some catalysts here this week. I've decided I'm going to hold it. Jobs report, Fed, both those catalysts. This is something we could see trade up to 26.75 by the end of the week. Something that we could see trade down to 25 here by the end of the week. And I'd be very surprised if the XLF is right here by the end of the week with the catalysts that are up and coming. So I'm going to hold it here. It's a high risk, proposition in terms of does it go my way. There's not a huge dollar amount left in it, but it is of some significance. But anyway, that's kind of how I'm looking at it. Looking at the price action here this morning, I don't expect a whole lot in it. I don't expect it to do a whole lot unless the market itself breaks down. And by breakdown, here we go. We're breaking these reaction lows, so we're going to see a little bit of sell come in, here with those reaction lows broken. But that's kind of what what I'm looking at. I did look at possibly going and taking it and buying some calls in U.S. Steel, but I wanted to see AK Steel's earnings report first, and we saw AK Steel earnings report, and I guess U.S. Steel's cheap, but it's not one that I'm going to play the earnings here for, at least for the challenge. I may go grab a couple calls personally that we'll probably lose, but just to scratch the itch there with U.S. Steel. All right, thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.